The Weimar Republic is what created the conditions for Hitler's rise to power. I'm not saying you get to that point, obviously, but do not underestimate how devastating inflation can be towards psyche and how that can result in conditions for something we don't want to ever see in any democracy or in any country. Inflation is a process. You can't necessarily get rid of it that easily. And if that process were to persist, and if politicians keep doing the same stupid asinine things they keep doing to throw more fuel on this inflationary fire and calling it an Inflation Reduction Act, you better believe there's real risk that you could have something really ugly.
Welcome back, rich followers. We hope this video inspires you to get started on your dream. So please watch until the end. And if you are new here, consider subscribing so that you won't miss other educational videos like this. Let's get started. Michael Goyet explains why he thinks the US is about to enter into another sovereign debt crisis.
There are many types of sovereign debt crises. One is, technical default, which is sort of a delay on payments, and then a hard default, and then restructuring, kind of like what we saw with Greece, right, in 2011, 2012. I think there's two sources through which there's some potential tail risk with a sovereign debt crisis. Let's talk about the US first, then we'll get into the international side. I just ran this stat. If you were to look at the percentage of weeks as a percentage of the year, the amount of times that yields have risen, right? Meaning that treasuries have lost money, yields have risen, that which the US government uses basically to fund its deficits. You've never had a time in history where 68% of the weeks in any single year, yields rose. Now, why is that consequential? Because if yields keep rising like this with $30 trillion of debt, never mind the unfunded liabilities, that means that suddenly, as that $30 trillion of debt needs to be rolled over, now it's going to have to be on a higher interest expense. This is a real big issue because the U.S. government can't pay that off. And if interest expense ends up being as large as your taxpayer base, and you're unequivocally in real default risk territory, or at least maybe a Japan-like scenario where you have just a terrible environment for many years to come. The bigger issue, though, I think, is that you have a real strain on the international side. Right? We know that a lot of sovereign international entities borrow in dollars for debt. And as they scramble for dollars, as the dollar itself keeps on rallying and rising and their currencies depreciate, there becomes a real funding strain for these economies that don't have the luxury of being the reserve currency and that cannot rely on modern monetary theory to pay off those liabilities. So we are in this really nasty situation. I keep going back to this point that you've never had a period where your starting point of leverage is so high, you've got higher interest expense, collapsing tax receipts because capital gains are evaporating, and everyone just being apathetic to the idea that maybe things will be okay when it really may not be. The problem is if everything is based on the new debt, which includes mortgage rates, which includes all the other very big purchases for the economies, the new debt is what sets the marginal rate for everybody else in terms of that which ultimately taxes are based off of, right? That's the real issue, right? So it's more than just the interest expense. It's about what does the higher interest expense mean on revenue also from the taxpayer perspective. So you end up getting to the same place of some kind of potential crisis. The issue for me is the dollar acting the way it is. I keep going back to this point. Most sovereign debt crises are preceded by currency volatility first. You look at the yen, you look at the euro, there is real strain going on outside the US. And I don't know, it seems really bizarre to be the complacency when it comes to the stock market because everything around the stock market is screaming and the stock market's not really listening.
Michael then discusses the fact that the current rate at which Treasury securities are losing money is unprecedented.
And this I've said many times is my hell. If anybody is being cynical about what I have to say, I'm very open about this. The problem in my role from a risk on, risk off perspective, all the funds that you see behind me, is they're all predicated on the idea that treasuries act as the risk off safe haven. But if you're in a year where treasuries are losing money week after week in such an unrelenting way, in a way that history would never suggest has ever happened, that becomes wildly difficult to rotate around equities and treasuries, trying to play defense with that which is supposed to be the safe haven asset, quote unquote, at least for now. So what we have seen here really has never really happened ever, including in the 1970s. I have people saying to me, well, this is to be expected in an inflationary bear market or an inflationary recession. First of all, it's not even clear we're in a recession, number one. And two, in the 70s, you never saw this either, right? And it relates to a lot of the other research I've put out there, which shows that the drawdown correlation of equities to treasuries has been wildly extreme, something we've never seen before as well. So make no mistake about it, what's happening this year really has never happened before. There are no parallels. And where that should, I think, worry people is if the anomaly, which is this interaction of treasuries to stocks, which has been my hell this year, if this anomaly were to continue, you better worry about more than just your portfolios. You cannot have a system where rates rise, stocks fall, recession comes, and then, oh, by the way, we keep on increasing spending to try to fix problems that were the result of spending to begin with. It's not just US-based phenomenon, this is a global phenomenon. So I'm not trying to be overly panicked here. My hope, and hope people could say is not a strategy, but in reality, you have to hope the cycle comes to you. My hope is that this anomaly ends, that we're not headed for that sovereign debt crisis, or maybe that if we are, that treasuries actually do what they're supposed to do, which is act as the quote-unquote safe haven. Because if you have a sovereign debt crisis, that's a deflation scare that's still coming. And that deflation scare can get really, really nasty.
Michael then discusses if at some point, the Treasury will communicate with the Fed that things are getting too expensive.
On the Treasury and the Fed speaking to each other, that's like me talking to myself. Because it's effectively one and the same. It's a catch-22. Damn if you do, damn if you don't. So if you have a situation where the U.S. government tax base is not unable to cover your interest expense, sure, then the argument would be the Fed will just simply subsidize that. Well, the problem is then now you've got more than just starting debt of $30 trillion. Now you have starting inflation at that point of a much higher level than ever before than we've seen. That's sticky. So you can't win in that kind of scenario. And I know people have been talking about the end game, the great reset, and all this stuff. I'm not necessarily in that mindset, in that camp, but I sympathize unequivocally with that view, because when you look at the way correlations have broken down and the way that the Fed is really stuck here, yeah, I can kind of see why everyone at the real extreme, those that have been deemed to be the crazies, right, in the world of finance, may end up actually getting the last laugh. But the problem is you don't want to have that last laugh, because it means we have much bigger problems to worry about. If the inflation sticks around as elevated as it is, and the choice is to subsidize those higher rates by the Fed trying to suppress the long end, again, with QE instead of QT, meaning they reverse course, and inflation doesn't come down, people have to be really careful about how despotism happens. Conditions create the monster, right? And in that case, what I'm really referring to is the Weimar Republic is what created the conditions for Hitler's rise to power. I'm not saying you get to that point, obviously, but do not underestimate how devastating inflation can be towards psyche, and how that can result in conditions for something we don't want to ever see in any democracy or in any country. Inflation is a process. You can't necessarily get rid of it that easily. And if that process were to persist, and if politicians keep doing the same stupid asinine things they keep doing to throw more fuel on this inflationary fire and calling it an Inflation Reduction Act, you better believe there's real risk that you could have something really ugly we've never seen in America before.
Michael then addresses if he believes the US is headed on a path to authoritarianism, which in essence is the government using power to run society with no opposition.
If inflation is not contained, if it stays elevated, and if the policymakers keep doing the wrong things, and if the Fed does not really get ahead of this, you end up entrenching inflation in the psyche of the American public and in the entire world. And you've seen this on the periphery with some of these protests and real violent type of actions against local governments, which you hope doesn't happen. I'm not saying that's going to come. What I'm saying is that if this inflation issue isn't resolved sooner than later, the odds, even though they might be low, do rise for that kind of a environment where somebody could come in and suddenly something much more severe comes from a governance standpoint. So again, it's not a base case, but this goes back to the point about, so if the US government is not going to be able to cover its interest expense with higher taxes, the Fed will simply do it for them. But that means that inflation is going to be the end result of that. And if the end result of that is inflation that's elevated, the end result of elevated inflation over time is, again, something that we don't want to see, which could be the rise of real despotism.
If you found value in this video, we would like to give you another video for you to enjoy next. Please like this video and share it with your friends on social media. Don't forget to subscribe if you are new here, so you won't miss another one of our videos. The more you learn, the more you earn.